right, well, welcome everybody. This is Jonathan G. Blanco with TF Blockchain. I'm super excited today. We'll be talking with Meltem. And am I pronouncing your name correctly, by the way? I'm a freak about pronouncing people's names correctly.
Yeah, it's just what do you do with s'mores? You melt them.
Meltem. All right, awesome. I love it. I love it.
Pretty easy.
Okay, good. Awesome. Well, hey, thank you so much for coming on the show. I'm super excited to just talk about what is going on in the world. It's been a crazy few weeks, and there's, internal factors, external factors. There's just so many different things that are leading up to it. So let's just dive right into it. Most people know who you are, but just in case, who are you?
Random person on the internet.
Nice.
Meltem Demirors. I've been professionally investing in the crypto space for the last 5, almost 6 years now. And in that time, have just spent a lot of time working with different startups, have invested in a lot of companies in the space, either via the firms I worked at or personally, and have just, become one of these people who lives on the internet, i.e. it used to be like Bitcoin talk forums back in the day and we'd know each other in person, but now that the crypto community is so big and so global, which is awesome, a lot of the conversation happens on crypto Twitter and Telegram. It's always fun to meet people and they're like, we know each other on the internet.
Right.
Pretty amazing.
You're definitely a fun person to follow on crypto Twitter. What's your crypto Twitter handle real quick for everybody?
It's Melt_Dem. Or if you just look up Meltem, pretty easy to find. Yeah. So look, I've just been around this space for a while. I think everyone has sort of the same story of how they got into Bitcoin. At this point, I think it's not really worth telling anymore.
No.
I also think it's like a little bit, I always find it interesting because I don't care when people got in. People are always like, yeah, I got into Bitcoin in 2007. And I'm like, shut up. Like, stop.
So you'll love this. The other day, I had someone let me know that they had been in it since 92. And I was like, yeah. I was like, okay, cool.
The Bitcoins in 1992.
Let me close my ears real quick.
Look, like, I get it, but that's why I don't really think it's that relevant anymore. Maybe back in the day it was, because there was a lot of solidarity, particularly around like Mt. Gox and then the Ether hard fork, I think, for a lot of us, the block size wars. I think now there's so many people who are new or who've gotten into it in the last few years. So it kind of is like, let's find something new to talk about.
Sure, totally. Yeah. Well, I think that new thing to talk about is, holy shit, what's been going on the last couple days?
You know what's so messed up? I forget where I was reading this. Like, I've just been on the internet for the last 10 days.
It's just so easy to do.
Mainlining. Okay, so I was reading something. I think it was on Wall Street Bets, which is like the most messed up Reddit community ever, but I love it. It's like people who are just YOLOing on their Wall Street Bets. Yeah, okay. It's people just like on Robinhood options trading without actually knowing what options are. It's amazing. r/Wall Street Bets. It's terrible. There's a guy on there who's like, I just went on a cruise for 2 weeks with no internet, no Wi-Fi, nothing. And I just got back and I'm like, just imagine for a minute that you have been in a coma for the last month. Okay, you wake up. Okay, hold on. You wake up. Number one, R.I.P. Kobe.
Right? That's
nuts. That was devastating. That happened. 1, 2, coronavirus. What just happened? Number 3, oil price war, right? Oil is basically wrecked. Number 4, global market meltdown. Number 5, unprecedented economic activity, monetary fiscal policy actions. Number 6, every country around the world in total lockdown. Number 7, every industry that's cyclical and consumer spending driven completely wrecked. I would just say, put me back in the coma. Like, let's try again next month.
Yeah, you
Try
can't
again.
you can't go outside. No sports, like the things that people go to in times of crisis too. You can't do. You can't even go to the movie theater. NBC Universal says that they're going to stream it. Although I haven't been to a movie theater in a really long time. But yeah,
Yeah, I don't go to movie theaters. That's what pirating is for. Like,
there's no social interaction. It's funny. I like talk to my neighbor across the street, and I'm like, "Hey," and then he starts walking towards me, like, walk back. I'm like, I'm not a prepper by any means. I'm very well prepared, of course, but yeah, my whole thing always from that side is like, you can't control how well other people take care of themselves, and so whether that be financially or with their health, and so I just like to err on the side of caution.
Look, okay, so here's my whole thing. Okay, so you get out of this coma, right? And you wake up and you're like, what? Huh? What just happened? Rewind. Okay, but then you actually take a few steps back. And I think if you're listening to this podcast and if you're into Bitcoin or like crypto, you've been thinking about this for a long time, because I think for a lot of people, what I always think about, like, I never thought I was a political person, right? I was like, I like money. I like capital markets, rah, rah. Like, I'm a trader. I'm a finance person. And then the financial crisis happened, and I was like, gotta rethink that trading thing. Like, oh, yikes.
Yeah.
And I think a lot of people who got into crypto, who are into it, like, you start to understand the relationship between your politics and your finances, right?
Very fair.
I think a lot of people who are listening to this, like, nobody is really surprised by what is happening, which is why I think a lot of people are like dropping Twitter hot takes, myself included, but like, this is the end game we've all been playing out in our heads. So we're living inside of this perfect storm. And now in the months and in the years that are going to come, this is Bitcoin's time to shine, right? We're going to find out if all of these things we've been talking about inside our little cypherpunk, like, libertarian bubble at these conferences we fly to, where we infect each other with optimism and monetary Darwinism, but also potentially coronavirus. We're gonna
which did happen though.
It did. Yikes. So look, we're gonna find out. I think right now what we're seeing, so I like people in the Bitcoin community, right? There's a lot of capitulation. Like, we don't see it in public, but behind the scenes, I'm talking to people. They're like, I think that I've given up. I think I'm going to liquidate. Like, I'm done.
Yeah.
But here's the thing a lot of people don't realize. In a liquidity crunch, like we're seeing it now, people are going to liquidate anything and everything they can because 100%. They're in pain, sure. Right? And fear is the emotion most people operate by. Yeah. It's fear, right? So right now, shit feels really scary. People are afraid, and they don't want to live in pain. And so they'll do anything to stop the pain, which means they're selling anything and everything they can.
Yeah.
And that's what's happening. It's called capitulation. It's not rocket science.
Yeah, sure. It's like, hey, how do I survive as long as I can? Because who knows what may or may not happen. I need to have as much cash on hand to be able to do that.
Not even that. I think even people who are affluent, who've been in Bitcoin for a while, who've made a good amount of money and have, a sufficient cash cushion, they just don't want to be in psychological pain, right?
Yeah, that's fair.
And this is where I think what's interesting is they're different types of investors, but I think there are like two extremes, right? There's the really emotional investor, and they're the person who's buying Tesla at 900, right? They're the person who's buying Bitcoin at like 17.5. They're the person who is FOMOing in at the very last moment and buying at the top and then selling at the bottom.
Yeah, buy high, sell low.
But that's emotion, right? And it's really hard. I will tell you, it's really hard for me to manage my own emotions.
Yeah. Yeah.
Because that's how we're wired, right? That lizard part of your brain just takes over. And so a lot of people right now are feeling a lot of emotions. And by the way, like, there's no sports, there's no TV, you're sitting at home.
Right.
And the only thing there is for you to do is like feel all of these really awful feelings where you're like shit, like, what do I do? So I think that's one type of investor. And then the other type on the other side of the spectrum are people who are extremely disciplined, who have a clear plan, right? They have their targets. Like, I call this the people who ladder their orders. And I'm more of this person where like, I like to ladder all my limit orders. I'm like, all right, this is what I'm getting in at. This is what I'm getting out at. Like, here's where I take profit. Here's how I structure it. And so I think for those people, this is fine because they had their limit orders in, they're managing risk, et cetera. Yeah. Now, what's really interesting, what we learned this week when the Fed last night, Sunday night, loaded up its monetary bazooka, just fired it full throttle into the market. Yeah. Just like money bazooka, is that a bunch of fund managers who are managing shitloads of money did not manage their risk.
Right. Totally.
And so what we're seeing right now in the market is this liquidity crunch, right? People are way over levered. They're in way over their skis. And the problem is when you're over levered and a market goes down, not just one thing goes down, everything is going down.
Yeah, totally fair. And it's right. When you start thinking about Bitcoin being the safe haven thing, it's like, hey, it's not necessarily a safe haven against everything. Like if confidence, right? If banking confidence, if financial confidence goes down, that doesn't mean that all of a sudden something's going to go up in value per se, right? It's more about.
Well, that's the part I don't understand. When people are like, oh, well, the value proposition around Bitcoin hasn't been proven out. And I'm like, look, the fact that it's not zero and the fact that some people are still holding it, even though it's highly liquid, is a sign to me that there's still some degree of confidence. And look, I also think like it's been 4 or 5 days.
Yeah.
It just takes time for these things to work through the market. What's really interesting, okay, so for your listeners, I want to share some interesting stats because, I like facts. This is like, I could sit here and pontificate, but that's not as interesting as looking at the data and being like, let's be analytical about how we view the world. Okay, Here's what's really interesting. All right, in the last 10 days, we've had 2 of the worst stock market days in recent history. That's interesting. What's really interesting is if you had sold on those 2 days, right, and you missed the days of kind of gains in between, you'd be down twice as much as if you had just held. So that's interesting. So when you buy, when you sell makes a big difference. Tom Lee actually talks about this at Fundstrat. What he talks about is if you are not holding Bitcoin in the 10 best performing days of the year, you miss out on all gains. Like Bitcoin's one of these things, you have to have conviction and hold it. Otherwise you miss the runs.
Right.
Okay. And so here's what's really interesting. So over the last 100 years, we've had a number of different recessions. And there's this really interesting analysis that was done by An Ounce of Common Sense. I think that's his Twitter handle. He's a wealth manager who works at an RIA. So he did this interesting analysis where he looked from peak to trough in these past 100 years of economic recessions. What was the total drawdown and how many months did it take people to break even after the bottom of the trough? Okay, so today stocks are going down, market's down, 27% since its peak earlier in February. So how many months has it taken in prior recessions? Okay, so I just want to give you a few.
All right, I'm excited.
Okay, so in 1929, right, the Great Depression, from peak to trough, first of all, that took 3 years. There was a close to 90% drawdown, meaning assets lost 90% of their value. And it took 13 years for people to break even.
Huh.
Okay. All right. That's one fact. 1940s, right? 1940, 1942, 35% drawdown. It only took 10 months for people to break even. Here's what gets interesting though. So markets now more connected than ever, more digitized than ever, moving capital across markets, asset classes easier than ever, more efficient than ever. Okay, sure. Here's what I get excited about. Okay, so 1987, close to 35% drawdown, only took 17 months to recover. 1990s, 20% drawdown, 4 months to recover. 1998, 20% drawdown, 3 months to recover. 2000s took a little longer, took 4 years to recover. 2007, 3 years to recover. But the last 2 sort of mini recessions or mini drawdowns in 2011, 2018, only 4 months to recover.
Interesting.
So the question is not if we will recover, because we will. And this is where I go back to, there's a great investor, Howard Marks. He runs Oaktree, which is a big investment firm that's now owned by, who are they called? Brookfield Asset Management, much larger asset manager. Okay, and Howard runs a distressed debt fund, and he was raising for a distressed debt fund in the midst of the last financial crisis. And he has this great podcast with Patrick O'Shaughnessy, where he talks about what he's learned from investing in distressed times. And one of the interesting things he says is, like, there are people who believe they know nothing, and there are people who believe they know everything. And the investors who believe they know everything, they're the people who are the most likely to lose money, because you have to stay humble. But the other thing he says that I think's so relevant is, look, the world, if it ends, you're fucked anyways, right? Like, if tomorrow the world ends and like contagion happens and all of us die, like, it's over, it doesn't matter. But the reality is the world's not going to end. Yeah. And if the world doesn't end, which we know it won't, then there's only one question. Did you do your job? Okay, so you know the world's not going to end. You have this data. You know the market's going to recover. You know the market, yes, there will be a trough and we hit a bottoming, but at some point you will break even again. You know that's going to happen. You don't know how fast it will happen. You might have some ideas and everyone's like trying to make predictions, but you know that the world's not going to end. The question is, what do you do with this information? And the sad reality is that 99% of people will make the wrong decision.
Yeah, right. Yeah, because it's I can see, you know, like you're saying, when you're acting in fear, it's like, oh shit, what do I do? Well, a little bit of cash is better than no cash, because of this fear of it going to zero, this fear of it bottoming out. But those are amazing stats. Yeah, if I just hold on to, you know, I'm talking to my dad right now. He's like, fuck, my 401k has just, you know, gone down however much. Like, I should have sold it. I was like, well, don't sell it now. Don't sell it now. And you're right. You probably shouldn't have sold it. And especially him, he shouldn't have sold it because he wouldn't know what to do with it anyway. Right. So like
but that's the thing. And like the biggest worry is that in the process of selling it, now he has to be right twice. Right. Exactly. If you do nothing, you don't have to be right at all. You just sit and you wait.
Right.
If you sell and you try to rebuy later, you have to get two things right. You have to sell at the right time. You have to buy at the right time. Okay. I'm not a rocket scientist. I also don't think I'm an idiot, but like the probability of me timing both things right is very low. So it's like, what do you want to take chances with? Do you want to bet on yourself getting two things right both times?
Totally.
Or are you willing to bet on the macro trend, right? Like the trend is your friend. And so I think, again, like, am I playing around with some of the money I have in, you know, my brokerage account? Am I playing around with some of my quote unquote, what I call play money? Yes. Am I changing my long-term allocations? No.
Yeah.
No.
Yeah. 100%.
Why? And then just like the mental and emotional stress it caused, I think is interesting. The other thing I want to talk about for your viewers is, like what's happened over the last 3 decades, because I think it's really interesting. Okay, so I, in the 90s, was a kid, right? I was running around like eating glue, so that decade doesn't apply to me. In the 2000s, I was in university and then I was working, right? And so in the 2000s, what we saw is it was the decade of hedge fund managers.
Yep.
Right. So like the 90s were the era of the digitization and the globalization of markets. The 2000s were the era of the fund manager, right? And all of the big fund managers that we know started their flagship funds in the 90s, raised crazy amounts of capital. Like they were kings of the world for a while, but also they were the beneficiaries of a massive, massive, massive economic boom. So the 90s were the era of the fund manager. Sorry, the 2000s were the era of the fund manager. And then 2008, 2009 happened and a bunch of shit blew up and like we rethought that. Yeah. Then the 2010s, the next decade, was the era of the startup founder, right? So you have, you know, from 2009 to 2019. In 2009, the most powerful companies in the world measured by size market cap were ExxonMobil, China Construction Bank, JP Morgan, Walmart, all of these firms that dealt in physical things, Shell, right? 2019, the largest, most powerful companies in the world, the wealthiest individuals in the world, not industrialists, tech founders, Jeff Bezos, Mark Zuckerberg, Apple, and everyone associated with Apple, Steve Jobs, Google, Alphabet, that whole group of people, right? So in the last 10 years, the big shift has been from hedge fund titans, the world of equities and commodities, to the world of tech founders, right?
Totally.
And now the question I ask myself is like, that era is coming to not an end yet, but that era is on the decline. We see this already with people questioning preferred stock structures, the things that give founders their superpowers. And we're seeing kind of the shift away from balance has always been tilted in favor of founders. The last like 3-4 years, there's been more money chasing ideas than there have been good ideas. So the balance shifted. Now we're seeing that start to maybe revert a little bit. People are not as far out on the risk spectrum anymore. So the question is, this next decade, what's this decade going to be about? And who are the new superpowers going to be? And this is where I think, to me, Bitcoin gets really interesting. I think the next decade is going to be defined by people who build systems that help disintermediate compute and connectivity.
Yeah. The
because
product.
compute and connectivity are the commodities of the modern age, like oil, gold, like industrial commodities. Not so relevant in my view anymore. What we need, like, look at the things people care about.
Yep.
My phone, my laptop, I want access to data. I want connectivity. Mobile phones 20 years ago, majority of bandwidth was used for voice and text. Now 70% is data. For sure. Connectivity. And so in this era of connectivity and compute, I think like Bitcoin is a great example of the first decentralized peer-to-peer telecommunications network, right? It is a communication protocol. Just what it communicates is value. And so I think a lot of what we're going to see is the rise of empires that are built on compute and connectivity.
Yeah, I totally agree with that. And I think we'll continue to see the productization of, not just like the infrastructure side of things, but just at the consumer level, right? Like, I think of Square Crypto, being one of the best at productizing Bitcoin for the masses and making it available.
Okay, but hold on, let's talk about that, because they haven't productized anything. Like, I love the Square Crypto team. They've marketed crypto, but they haven't productized new user experience. What they've done, right, is created a synthetic asset.
A wrapper.
But when you own Bitcoin on Square, like, you don't actually hold the keys. It's not your Bitcoin.
Totally agree with that. No, I'm 100% clear on that. So I guess from this point, then it becomes of like, where does Bitcoin have to live for it in this sense, right? So like, I actually am a firm believer that the majority of people who will end up owning Bitcoin will end up owning it from those types of mediums, right?
For now, right? It's like the first step. But here's what I think is really interesting about the economic situation, right? For the first time, like in prior periods in history, when the Fed printed money, nobody talked about it.
Yeah.
Right? Like in 2009, when TARP happened, nobody really talked about it outside of like financial circles.
Or foil hat
Twitter
people.
Didn't, but like Twitter didn't really exist. Zero Hedge didn't exist. Like none of these things existed. 2020, everybody is talking about it. Mm-hmm. Like, I made a joke today, but I'm actually 100% serious about it. I want someone to write a children's book called Brrr Goes the Money Printer. It's about monetary debasement. Yeah. I think it'd be a great book. Like, the sound effects, like Brrr Goes the Money Printer. As a Birdman fan, and that ages me, like.
Yeah.
I went to Rice for undergrad. We were the owl. Like, there's a whole thing there. But look, I think, like, look at the conversations people are having. I have my friends who are like not in crypto, not in finance. They do totally different things. We're in a WhatsApp group and they're all talking about like the Fed fucking us over. They're talking about bail-ins, bailouts, stock buybacks, the managerial class enriching themselves. And I'm like, what happened? This is amazing.
Yeah, the sophistication of the average, person, I guess, dealing with this is much higher than it was in 2008. 100%.
Okay, so the first step was the democratization of information, right? And that's where social media was the great equalizer, right? So if you look at these communities on Reddit, on Twitter, I know we like to joke about crypto Twitter, like there is really high quality output
There's
that
great
used to only be available to a very small group of people. It's now being shared on like Medium, Substack, Twitter, all of these platforms. So the quality of information and the availability of information is phenomenal.
Yeah.
So again, 2010s, we're building that infrastructure so that information could be disseminated on a global scale. But it hasn't really been actionable to date. Like the only thing you could really do is go on Coinbase and buy Bitcoin. And it's like buying Bitcoin on Coinbase is one step removed from like buying GBTC in your Charles Schwab account, right? It's like,
it is, you're right, 100%.
It's a great first step, but it's not why we're here. So what I'm excited about is like people are taking this first step and now they're asking, what's the next step? And there's this whole generation of companies that's going to get built, and I'm investing in them and I'm working with them and supporting them and trying to build one myself. So like there's this whole generation of companies that's going to get built that's going to help do for money what the last decade did for information.
Yeah.
And that is going to be transformative. Like peer-to-peer money is going to become a reality. It will take time, but we're starting to see it happening, and I could not be more excited. Like this is what I'm here for. This is why I showed up 7 years ago, and it's just now like slowly starting to happen.
Yeah, no, I love it. I love the excitement, and I totally agree. I think just being able to, on the payment layer is what's always had me so fascinated about it. My background is in e-commerce and retail tech, and so just the transactional element and is really what kind of got me into crypto just to begin with. And it was funny as I started out thinking more about like, oh, this is an interesting fundraising mechanism. I'll be honest, I'm always the first to admit that. And then I was like, oh, that was actually, and we never used it as a fundraising mechanism. And I'm glad that we never did, to becoming like, okay, all I care about is Bitcoin now. When it, sure, I think there's value.
But look, there's no shame in the game, right?
Oh, no. Yeah, I mean, it's just part of it was for me, it was all part of the learning, right? And so, the way I think about what I'm super passionate about, again, is like what you're talking about is the payment layer from a Bitcoin perspective, but then also from a digital asset perspective, whether like stablecoin, whether it be in banking, even if it's centralized. I actually still find that fascinating from a technology aspect of it. It's interesting because then I also I have social or beliefs about that as well, right? Like I'd rather be on the disintermediation and the I'd rather be on this Bitcoin front, but I don't know that it's fully possible yet. And so that's one topic I want to talk to you about and see like kind of what your thoughts are over there. Like how do we get to that point?
Yeah, here's what I always say. Like what we've seen over the last 10 years, right? Bitcoin, the biggest companies in Bitcoin are banks.
Yep.
They're all banks, right? They take your Bitcoin, they hold it for you. They don't hypothecate it yet. You can go to a bank like BlockFi or Celsius or Nexo that hypothecates it, but they at least pay you interest on your deposit, and the interest rate you get is pretty good. But most of these institutions are banks, and it's only a matter of time until the Coinbases and Krakens and BitMEXs of the world figure out how to earn interest on the funds of yours they custody. Right?
Yep.
So these institutions are banks for all intents and purposes. And that's not a bad thing. Like I think from an evolutionary design perspective, everything we build is an iteration of its predecessor. And so by its very nature, because the past defines what's possible in the future, what we've built to date is in many ways very similar to what we've built in the past.
Yeah.
And what I think is really interesting is also like the types of people who are in crypto. So now I see a lot of people from Wall Street in suits who are like coming into my office and telling me in a very pedantic tone, they're like, let me tell you how options work. And I'm like, no, thank you. I already know that. Thank you very much. No insult, but I think there is sort of this like new wave of people coming in who look very much like the old wave of people, and they want to do the same things. And that's fine. Great. But I think the next, like that wave is done. So what do we build on top of that? The next layer on top of that is payments, right? Yeah. So the great thing is with all of these custodians we now have in the US, like the Geminis of the world and the Coinbases, we can now start to build really cool payment solutions that offer payment integrations via API and SDK. And so now all of a sudden you can, with 1 or 2 lines of code, embed crypto into an existing platform. Yep. So it's like, okay, that moves things forward a step. Then all of a sudden you start to introduce the idea of non-custodial wallets to people. right? And so I'm personally an investor in Casa. They're doing a lot of really cool stuff around key management that I'm excited about. Unchained Capital, love what those guys are doing around collaborative custody and multi-sig key management as well. There's like a bunch of companies who are starting to slowly push the bar on key management and non-custodial wallets. Samurai Wallet, what they're doing is like very out there, but I think super important. So slowly you get these layers of things building on top of one another. And what I think is so cool, DeFi, everything that's happening there is, I don't think a lot of it's very scalable because it suffers from many of the problems that we have in existing finance, that we have in existing structured products. But I think the ideas that are being introduced are really interesting. They just have to be applied and implemented in a slightly different way, right? But again, we build the prototype, we iterate, and then it gets better with each iteration. What I think is really interesting is we have the technology, we have the tools. I think we finally also have people who understand how to communicate.
Yeah.
Like in 2015, you would go to a Bitcoin event and like talk to Bitcoin founders and they'd be like, let me tell you how a zero proof transaction works. I'm like, not very, I'm excited about that. Let's talk about that, but not very accessible. I think now, number one, there's big enough community about crypto. Number two, I think we know the language, we know the words, like it's proliferated through pop culture enough that we can now actually talk about it and people get it and are excited about it. I think that's really cool. But I think the other big thing is like, there's finally a burning platform. The burning platform is, hi, the Fed is about to print trillions of US dollars. What are you going to do about it?
Totally. Yeah.
And so like you take these things and you combine them together. I think that starts to get interesting. It's going to take time. Like I think the other thing people forget, I've been doing this 6 years. I'm going to do it for another 16. And it's still going to feel like, we've made very slow progress, but human behavior doesn't change that fast. So the first one of these came out 10 years ago. No, 13 years ago. I remember it was 2007. The guy I was dating in college had just gotten the iPhone 3. And I remember being really mad because we used to like do fun shit. And then he went from doing fun stuff to like just being obsessed with his iPhone. And I didn't get it.
Yeah.
I was a BlackBerry user. And then I got an iPhone. And I was like, that's cool.
Yeah.
The shit I do on my iPhone now that I couldn't do 13 years ago.
It's unreal.
Right.
Yeah.
And the things I will do with my phone, I just got an Apple Watch. I'm such a squid. I just got an Apple Watch because I have this problem where I sit down in the morning at like 6 a.m. and then I realize it's 8 p.m. and I haven't gotten up. I haven't had any water. Like I haven't even peed. I'm like, that's gross. Your body's not supposed to do that. So it like buzzes me every 30 minutes to tell me to get up and drink water, which is pretty cool.
That's awesome.
So what's really cool.
Do you follow that Twitter handle, by the way? The drink
Which
water.
One?
It's like drink water or something Twitter handle.
No.
You know what I'm talking about? All
no.
Right, let me find it and I'll
I
want to
see this. I need to drink water. But like my little thing just told me like, did you take your vitamins? I take fish oil and vitamin D. Controversial. I dabbled in supplement Twitter and it was weird. Okay, so anyway, all of these things I'm doing now, right? I never would have done before. Ever. I never would have thought I was doing them, right? I like live with these little plastic bullshit things in my ear, right? They're like an extension of my body. So I think, again, if we think about Bitcoin, we're 7 years in. We can just now like do very rudimentary things like sending a message on your iPhone, like just now. So it just takes time. But once people start learning this new behavior, whether that's through Libra, whether that's through central bank digital currency, whether it's through someone like Stripe or Venmo or Square or Fidelity, adding some crypto, even if it's not actually Bitcoin, but it's something else entirely, like whatever it is, people are going to start to learn. And the thing that's amazing is once people start learning, like people are really creative. People are much more creative and much smarter than we give them credit for. They're going to do really cool shit with it.
Well, and the learning curve is so fast, right? Because going back to your cell phone example, I remember it took my dad, I don't know, he didn't get a smartphone until probably like 2015 or 2016. And he does shit with his smartphone now that I'm like, how did you do that? Right. And so like the learning curve becomes so much faster, so much higher. And the behaviors that people use, right?
People are going to start to solve problems with it, right? So that's the interesting thing is 5 years ago, Bitcoin was like, oh, that's for criminals. And now it's like, wait a minute, I have a problem. I might consider using Bitcoin or cryptocurrency or some digitized version of something to solve this problem. And I think the fact that people even contemplate it and that it comes up in conversations, amazing. So again, I think people have to give it time, but we also have to be really tolerant that like 99% of the stuff people are going to do with Bitcoin is going to be really stupid.
Yeah. Yeah.
It's going to be dumb, but it's all part of that process of iterating and creating. Like 99% of stuff I did on the internet in like 1995 was dumb.
Oh, totally.
But it was awesome, and I had a great time.
Well, yeah,
Right?
but it evolved. To exactly your point, it evolved, right? Like chat rooms, right? Like we use chat rooms every single day. It's called text messaging or Telegram or WhatsApp or whatever.
Yeah,
right?
3 billion people on WhatsApp.
Yeah.
Like just that number, first of all, that number blows my mind. That's like a whole lot of zeros. That's almost 50% of the world's population.
Yeah, massive.
That's dope.
Yeah, yeah.
Like I meet people, I'm talking to someone on my phone right now, someone from Vietnam who's building a lending platform, and we're just chatting on WhatsApp.
Yeah. Oh, totally.
And it's free. Well, Facebook mines all our data. It's fine.
Yeah.
And the NSA probably has a backdoor.
They definitely have a backdoor, but supposedly it's encrypted and you know.
Yeah. Okay.
On your system.
Yeah.
No, it's crazy. No, you're totally right. I'm actually really excited for that as well. And I 100% agree with you. Is it doesn't necessarily matter what the entry point is as long as it like leads to the overall, kind of value and goal. And it really, what I've learned the most in this whole journey is the exchange of value between participants, and more like, and it's, what's interesting is that's actually taken me even outside of just the financial world, even to my relationships, just like human to human interaction. What's the exchange of value here? And, it's like,
okay. So this is where I want to end, because I think this is like the most fascinating part to me. And this is the part that I get really like hopped up about.
Yeah.
I get heated about a lot of things, but that's just my enthusiasm. It's also being inside all day. You guys, I don't know how I'm going to do quarantine. Like I was not made for this.
Do you have a balcony? Is that your balcony out there?
Yeah, I have a patio, but it's it's cold. So I sat outside all day in my,
it's only money.
Yeah, this is the Barstool Bets sweatshirt. I have to give a shout out to Hubs, who I rated this from his closet. I was like, today is the day. This is perfect. So here's what I get really excited about. Okay. In the olden days, right, before we had banks, the way money and economies and relationships and communities worked is you're my neighbor, right? And I'm your neighbor and I need money, but I don't have any money. I would go to you and I'd be like, hey, buddy, like having a tough time. Can I borrow some stuff from you? And then I'll pay you back when I have stuff. And like, we figured it out. And there was this really dense, informal web of relationships that have money embedded in them. That evolved and evolved and evolved. And then banks were introduced. And then at first it was churches, right? It was houses of the nobles and churches where people would go and take their extra coinage. And they'd be like, hey, will you keep this safe for me? Like, I trust you. You're a trusted pillar of the community. Then it became banks, and then it became a commercial activity, and so on and so forth. Okay. But if we think about the world we live in now, how many of your friends or family members do you talk about money with?
I feel like quite a bit, but probably
like your income, your debt, how much you owe on your mortgage, what's in your portfolio.
Nobody. I don't talk.
Do you talk with your spouse about that?
Yeah, we talk about that. We like for part of the plan, but probably not as much as like I would like to or we should type of thing. To be honest, yeah. We have like our plans and so forth, but I know I kind of see where you're going.
So like think of your 5 closest friends that you talk to most often on your phone. Do you guys talk about money, your income, how you're investing, like your fears about money, your concerns?
Got it. Yeah, we do. Like we don't necessarily talk about our income, but we don't talk about our income, but we definitely talk about like what we're investing in, or how we're spending, or what we see trends to be, or so forth.
That's really impressive.
Yeah.
Okay, so most people don't talk about money.
Yeah.
And they never talk about money.
Mind you, I'm talking about with my close friends, right? Like that's, like it's probably like two or three people max that I talk about that with.
Yeah. Most people don't talk about money.
Yeah.
They don't talk about their salary. They don't talk about money. They don't talk about what they have saved. We don't know anything about other people's financial lives.
Yeah.
Like you can watch porn and watch other people have sex, which is arguably supposed to be the most intimate part of your life. There is no like real financial porn where you can watch how other people are managing their money.
Yeah.
And maybe this is happening informally, but like the asset management industry and the financial advisory industry has largely failed people, right? Because we don't talk about money, and money is so foundational to our sense of security. And I think the lack of financial literacy is such a huge problem, and it's prevalent at every layer of society. If we look at the stratification of society, the difference between people who do well versus not do well, a lot of it ties to, you know, opportunity as starting point in life, but it also ties back to financial literacy because many people never like learned the basics. Okay, so here's what I think is so interesting. We're going through this information revolution, right? And we're like 15 years in, and we've had this amazing blossoming of all this free information that's available, and people are starting to take advantage of it. And it's starting to like become fun through memes and like the internet and all of these fun handles and like FinTwit and crypto Twitter that are making money fun and interesting, right? So step one, information.
Totally.
Okay. But now the problem is I have this information and I want to go do something with this information. Have you ever sat down with a financial advisor?
It's brutal.
It's a horrendous. Like I had a financial advisor who talked to me about avocado toast and like buying Prada shoes. And I was like, I'm sorry, like what,
Yeah.
like what is it 1950? Did we not get this memo? So it's a bad experience, right? So the next step is, how do we innovate and create a different experience? And I think there's a lot of cool stuff happening in this space, but it moves really slowly because of this thing called regulation. Okay, then crypto comes along, right? And it's like this crazy Wild West. There's just like crazy people on the internet doing weird shit, just throwing money around, peer-to-peer. What I remember back in the day, Bitcoin faucets, right? Like you would literally have someone just sending you Bitcoin so they could use the CPU or the GPU in your computer. Pretty amazing, right? So you have this like amazing evolution of peer-to-peer money, and ICOs, yes, they were ridiculous, and yes, they were dumb, and a lot of money got squandered, and most of them were scams. But what's cool about it is for the first time, people started to ask, well, what role does a bank or a financial advisor or a regulated institution actually play? Because here's the interesting thing. Most companies, even ones that are regulated and listed and file proper paperwork, go bust. Most things are bad investments, right? And people seem to believe that regulation somehow confers quality. No, it means that you had money and you paid lawyers to file some forms for you. Having an SEC registered offering does not confer quality. And so what I think is really interesting now is like you have all these people who are educated and who are sharing information. You have all these people who are starting to talk about money. You have the equivalent of financial porn, right, in the form of social media, where people are talking about how they're managing their portfolios, how they're managing their wealth, how they're thinking about investing. So people are learning from each other. And the next step in this evolution is like, what are the platforms and tools we're going to use to help people actually implement what they're learning? And then how do we actually make financial literacy a cornerstone of how we think about building society?
Yeah.
And this goes back to what Polybius wrote about. Polybius is this Greek philosopher, and he studied the evolution of social systems. And there's this thing he observed about social systems and the way they sort of move in cycles, right? Like everything sort of moves in cycles. And so his big observation was about cycles and how people organize socially and choose to be governed and govern themselves. But his big observation there was, in order to have a well-governed populace, you have to have people who are educated about what good governance looks like. And the same thing applies here. The reason that our economy and our financial systems around the world are disasters is because we've had 5 decades of people burying their head in the sand like ostriches, just praying that things were going to be okay, or the system was going to bail them out. And by the way, the boomers have been the biggest beneficiaries of this, right?
Yeah.
Our generation's not a beneficiary of this. More debt than ever. Student loans, can't afford a home because the boomers live in all the houses and they're overpriced, right? It's like there's this huge problem we have. And a big part of the problem is we simply have not educated people about what financial literacy looks like and what good financial hygiene looks like.
Yeah.
And so totally like fair. What I'm excited about is how do we do that at scale? Like, how do we use the energy that's been created in all of these different communities online and in person to actually start translating into making real systemic change into how we educate people about how to obtain financial literacy, how to implement financial hygiene in their own lives, and how to obtain some sense of freedom. Because at the end of the day, it's about choice.
1000%.
If you want to buy your Bitcoin on Square, if you want to hold your Bitcoin on Coinbase because it makes you feel good, I'd love that. Go do it. Amazing power to you. But if you're a crazy person and you want to hold the keys to your own Bitcoin and you want to do that, then you should have the right to do that, and those platforms should exist. Like, this is about choice and giving people information to make informed choices.
Totally. Yeah.
And that to me is what exciting. It's like we can finally maybe get to a point where we start to educate people. And by the way, with coronavirus, no movies, no TV shows, no sports. Guess what people are going to nerd out about? Money. So like, I'm excited.
Yeah. No, it's true. It's true. There's definitely so much there, and so much opportunity. Like you're saying, kind of like if you are holed up, you might as well be, learning about these things. And that's actually what we're trying to do, is just produce as much content as possible, and talk to amazing people like yourself that really just understand this stuff. And I totally agree. It's all about the education. It has to start somewhere, right? And
yeah,
it doesn't matter how far along you're in it. Like you said at the beginning of this show, or what entry point you came in, you have the opportunity to learn it, or to get involved, or basically have a seat at the table.
Totally. Well, and that's what's been so great about I think the crypto community is like, you can DM anyone, talk to anyone via Twitter. Like, it's very interactive, it's very real time. I think the other thing that's really interesting is building something is so easy, right? Like, I was thinking today about building a very simple app. And I was like, oh, I could do that in like 30 minutes.
Yeah.
Because all of those tools exist and they're mostly free to use. And even if they're not free, they cost very, very little. So the cost of building something in crypto is extremely low. Like, you can build all these amazing prototypes. And a lot of the best projects have started out as like quick prototypes people have built. So I think there is this amazing sort of age we're in, and it's the age of finance. Like, finance is taking front and center. Finance has never been cool. I have never been cool. And finally, I'm like, oh, maybe I have useful skills. Jury is still out. Like, maybe I know something that's useful. No, but like, all of the nerds are having their moment, because I think everyone's realizing it's really important. And there's just beautiful opportunities. So I hope we take it. I hope we do it right. I will be here with the memes, with the fun. And I like to have fun and keep it lighthearted. Like, you can't be very serious all the time, because I think that's exhausting.
Yeah.
But you try to inject a mix of like, here are some facts, here's some knowledge, here's some resources, and then here's some entertainment. But I'm excited to see what comes out of it.
Oh, it's going to be interesting these next couple weeks. Actually, how about this? Next couple days are going to be interesting. Next couple of weeks, months, next year.
Yeah, load up the money bazooka. I'm excited. Helicopter money is coming. I'm excited. I hope they do it soon, because I just started talking to people I know who are losing their jobs, particularly people who work in the service industry have been hit really hard. Yeah. So I think anything we can do to help them. Tonight I was trying to think of places where they could go to find temp gigs. I'm trying to see if I have some work that I can have people do, like temp work, so that people can find some stable income. Yeah, it's going to be a hard time, and we need to help small businesses. Like, we don't need to bail out big corporations where executives have gotten tens of millions of dollars of stock comp, and they've done hundreds of billions of dollars worth of share buybacks. Like, I'm not that interested in that. Yeah. I'm really interested in helping.
You don't feel bad for those people?
No, I actually don't. Look, I understand.
I don't either. So
I do feel bad for the tens of thousands of people who work for those large corporations.
Of course. Yeah.
And who cannot be reskilled to do anything else.
Yeah.
I think that's really what we're doing here. But I think a lot of people, what they've done, like the decisions they've made, have just displayed a degree of gross financial negligence. But again, it's like a lack of financial literacy. It's YOLO, nobody cares until shit blows up. And then all of a sudden everyone's pointing the finger and it's like, well, where was this 5 years ago?
Yeah. I mean, we're definitely at a point in financial history that there will be movies about these last few days, weeks, whatever, what's going on. No,
who's gonna be like the starring cast in that
like what
drama series? Yeah.
What actors?
No. Like what characters?
I was like, oh,
no. So I definitely think like Donald Trump is gonna be just
totally in there.
Yeah, it's not going to be pretty. I definitely think the three funds that were most over levered, so Millennium, Bridgewater, and Citadel.
Yeah.
Yeah.
You have to have Mnuchin in there.
Yeah.
Who else?
Jerome Powell. Duh.
Yeah. Oh, yeah. Yeah, he's definitely in there.
Uh-huh.
But who's like the Big Short cast of that? You know what I mean? Like, that movie, The Big Short?
Yeah. Well, there are a lot of people. Some guy came out today, some hedge fund manager was like bragging about how he shorted the market. I don't know.
Yeah. No, it'll be fun. It'll be interesting. I wonder if
we're going to find it's going to unfold. It's going to unfold. Like, it's going to take a while, but we're going to find out.
Yeah. No, it'll
be
good.
More big money bazooka.
Yeah. So no, I know that's crazy. So, I guess because of all your experience in kind of this, last thing I want to ask you is, what do you think is going to happen? What's your crystal ball say? And I'm not talking about price, but just like overall, like, what do you think happens in these next couple days, weeks? Do you think is a perpetual downswing? Is it like a level out? Is it just a light escalator?
No, look, I think right now people are living in fear, right? So if we go back to like how people are feeling, the emotion that people are feeling is fear, uncertainty, and doubt, FUD, right? And where people are feeling fear, uncertainty, and doubt, they do irrational things. So I think we're going to continue to see irrational behavior, but particularly in capital markets, right? Yeah. Because if right now I'm an asset manager, number one, I'm facing liquidation, right? Number two, I'm facing capital calls, like people want their money out. Number three, I'm facing margin calls, right? We saw VIX get blown out because of a short squeeze. We're seeing all of these things happening, and they're making us very anxious. And so people are just running for the exits, and they're clenching as tight as they can. They're like, I just want the pain to end.
Yeah.
And the pain will end. I don't know when, but the pain will end. And there's going to be enough liquidity injected into the system, whether that's in the form of helicopter money, whether that's in the form of, shutting markets, whether that's in the form of the Fed, injecting more liquidity into the system, whether that's in the form of, I don't know, Trump starting a campaign to say people who short are un-American. If you buy puts, it's un-American. Like, I put nothing past this administration. Yeah. Things are going to start to shift. And I think what we're going to see is the recession will last a while because there's a global health pandemic, and there's also a massive repricing of commodities happening thanks to the war of attrition playing out between the Saudis and Russia. And then let's not forget that, like, in the midst of all of this, China is trying to figure out how to position itself and play these cards, because China is really dependent on one thing, which is number go up, right? China needs to make the number go up at all costs. They got to figure out how to do that. By the way, so does Trump, right? We're going into the election, like, he's got to make number go up, especially for his core constituents. So it's going to happen. And I don't know if we're close to the bottom. Like, we're minus 23 to 25% right now. Maybe we'll dip to 30, maybe we'll dip to 40 in the stock market. What's sad this time, though, is we can't take interest rates any lower, which has always been an important lever. It can't happen anymore. So it's going to take a lot of cash. And then the other thing,
although there's talk about perhaps negative interest rates, that seems crazy to me, but.
Yeah, I mean, look, negative interest rates, I think, a quarter of all sovereign debt right now, fully quarter is negative yielding. We saw the first ever negative yielding corporate bond get issued in February by LVMH, the parent company of Louis Vuitton, which basically you are paying someone to take your money and give you back less money than you gave them in the future. Like, it makes my brain kind of like it does not compute in my, I'm like, that's opposite.
Yeah.
But basically it means people are really pessimistic about the future, right? So what I think is going to be interesting about Bitcoin in this context is, right now we're seeing a sell-off, and I think Bitcoin's going to continue to be volatile. Like the bottom of my price range is 3,500, although I think we're seeing like resistance around 4,500 unless they're cascading liquidations on BitMEX. But we're seeing kind of like resistance around 4,000, 4,500. But I think we'll stay between like 4,000, 7,000 kind of range, right? And we'll see some volatility.
Yeah.
But what I think will be really interesting is once things start to pick back up, it's going to take some time. A lot of people get shaken. A lot of people are like, oh, Bitcoin is correlated. A lot of people are like, oh, Bitcoin's not anti-fragile. It's not a hedge. I'm like, number one, it's not what anti-fragile means. Number two, that's not how hedges work, right? But I think over time, what you will see is, and this is the big test, right? Like this is Bitcoin's moment to shine, is are people going to start deploying capital into Bitcoin?
Yeah.
Hasn't really happened yet. It's been majority retail driven. So by and large, and like small crypto fund driven. Are people going to start allocating Bitcoin? And I think a lot of that depends on the narrative around what the Fed is doing, what's happening with central banks around the world. But if they do start buying, I think you could see significant price action. But I think that's going to take 12 to 18 months at least, if not longer. Because again, people remember, like there's this recency bias people have, and people remember pain.
Yeah.
And people are going to go through a lot of pain right now. So I think we're range bound for a while.
And when you're saying that, the money coming back in, are you saying that as new money or just like existing people getting back into the market or buying more?
I think there needs to be new money. There needs to be new allocators, new buyers coming into the space. There needs to be new inflows. I think the question over the last 2 years following the ICO boom, which was largely retail driven, is where's the new money going to come from? And everyone's like, oh, the institutions, but we have not seen that materialize.
Yeah.
Because they were too busy YOLOing on the S&P, which returned, close to 45% over a 2-year period.
Yeah, and it's something that they know, right? It's like, why?
But also like, look, it's all about the opportunity cost of capital. If I'm in a bull market and stocks are ripping my face off, like my opportunity cost of capital is really high. Mm-hmm. If I'm in a recession and I don't see a lot of prospects of growth, then my opportunity cost of capital is much lower. And it's also like everything in life is relative. And I think crypto people forget that.
Right.
Everything in life's relative, right? So if we're having a banner year in the stock market, people don't want to go so far out on the risk curve to get sub equities returns.
Yep.
So it's really just a function of the macro environment. But I think, again, as more people start to think like 5 steps out about what's eventually going to happen with all this money that's been printed over the last, 3 days, will get printed over the next, who knows, 3 weeks, it's going to be bananas. And so I think that'll be the true test. So look, like I said, it's been 6 years for me professionally so far. I'm sure it'll be another 6, if not 10. But I continue to believe that Bitcoin has an important role to play in the future of the financial system. I continue to believe that Bitcoin has an important role to play in the evolution of how we think about finance. And I continue to believe that the opportunity around compute and connectivity is absolutely massive.
Yeah. Awesome. So I know I said the last one was the last question. I just have one last question. I apologize. I know you had mentioned that I should have some water. I'm just kidding.
I don't have any water.
I have water. It's a mason jar too. Oh, it's getting lost.
Nice. Well, so my water is really far away. It's across the counter. My counter is really large.
But by the way, I pulled up the Twitter handle. It's Drink Water Slut. And it's really funny because, so it's most.
I'm offended.
Well, its most recent tweet goes, "Did you drink water today, you stupid bitch?" And so it's just like that type of commentary at you.
Okay, so it's like Mean Girls reminding you to drink water.
That's exactly what it is. Yeah.
I was having this conversation with someone today. It has been 3 years since I've heard someone use the term slut in a defamatory manner, which I think is like amazing.
Yeah, right. It's just more just like it's always in like some jokey tone. You're right.
Oh, look at this. My husband just gave me the water.
Oh, nice. Nice.
Oh, gem. Gem. Yes, you are. He's smiling.
Oh, I saw him in the reflection.
You did?
Yeah.
Ooh,
It's all good.
mystery man. Mhm.
Oh, okay. So the last question for you is, so, you do some investing in companies. What's some advice that you can give to founders, regardless if they're crypto founders or not? Like, what is some advice you can give to founders on how to operate, how to act, how to behave, what to
Yeah.
do during a crunch like this that we're in?
Yeah. So, great question. I'm about to actually publish my suggestions tomorrow. So last Wednesday, I started calling people, other investors. And then Friday, I called every single one of our portfolio companies at CoinShares. We've venture funded CoinShares. I called every one of my personal companies I'm an investor in, started that process. I'm not done with it yet. And I've just been talking to other investors and sort of gathering sentiment. And by the way, I haven't been through this before. I was not venture investing in 2009, but I've talked to people who were, and I've been reading what they're putting out. I think at the end of the day, really what it's about, and the only conversation I really need to have with founders right now is how are you feeling and how can I support you right now?
Yeah.
Here is what I need you to do for me. Your gross burn, meaning how much money you spend on a monthly basis, your net burn, which is how much money you spend plus money coming in, right? So net, how much cash you have in the bank, and you divide the two numbers and you get your months of runway. And I need to work with you to cut the number that you're burning, to cut how much money you're spending. And if we need to, bring more money in the door so that you have at least 18 months of runway. Mm-hmm. And then I think the big thing really is, again, it's about psychological safety for people. So it's about figuring out, okay, what do we need to do to get you to a place of psychological safety? Number one is fiscal security. You need to know that you're going to be able to make payroll.
100%. Yeah.
And that's what your employees and your team need, right? You need to be able to make payroll. So let's figure out how to do that. And then the second thing is, let's take a moment. It's going to take a while for revenues to get hit, right? So it's going to take a while for the effects of all of this to get sort of filtered in. But the flip side is there's going to be big opportunity. Mm-hmm. And so the question is, let's position ourselves so you can capitalize on any opportunities that emerge. Maybe it's acquiring a competitor that's not that well capitalized. Maybe it's stealing key employees from a competitor that's not very well capitalized. Maybe it's stealing customers. Maybe it's launching a new business segment. Maybe it's stealing market share from someone else. There are going to be opportunities, and we need to figure out how to take advantage of those opportunities. That's what I'm doing in our business as well. It's let's find ways to, first of all, let the effects of this sort of filter through and get to a point of safety. Yeah. Everyone needs to know they're safe. And once we're safe, how do we attack?
Right.
That's it.
Yeah, no, I love it. And then what about so that's seems like what you're doing with your portfolio. What about someone, what would you say to someone that's either not in your portfolio or is looking to fundraise? It seems like it's probably not the best time to be fundraising right now. What
I don't think that's true.
That?
No,
okay.
I categorically reject that notion. Yeah. So look, first of all, here's an interesting thing you need to remember about incentives. Okay.
Yeah.
People who run venture funds, people who are paid to allocate capital, they don't get paid on money that's uncalled.
Yeah.
They don't get paid on capital that's uncalled. They don't get paid for sitting on cash. They get paid when they deploy capital.
Right.
Okay, so we had last year, banner year for venture capital, over $100 billion of fresh capital raised for venture funds. Most of it's going to get called over the next 2 to 4 years. People are not going to get paid if they don't deploy. Yeah. And people need to get paid. So what's going to happen is people are going to be more judicious about how they deploy. People are going to initially slow the pace at which they deploy because everyone wants valuations to come down, right? Yeah. So we're also hunting for good deals, right? There's some deals that I maybe would have done last week at the current valuation, but I know if I wait 3 more weeks, I can do it maybe at 2/3 of the valuation or get myself more for the same amount of capital, right? Yeah. So I think there are a lot of investors who are also being opportunistic, but people have to deploy capital. There's more capital in venture than ever. There's more funds than ever. There's more capital dedicated to this industry, by the way, than ever, right? So there's a bunch of money sitting on the sidelines. There's a bunch of money in private equity, right? $1.5 trillion of dry powder in private equity, according to the research from Preqin. And then corporations, let's not forget, who, by the way, are big acquirers. Visa just acquired Plaid for $5.3 billion.
Yeah.
Right? Big deal. Corporations, Facebook, Amazon, Microsoft, Google, and Warren Buffett's Berkshire Hathaway, between them, they have $500 billion of cash sitting on their balance sheets.
Yeah.
There is a lot of money out there right now that is hunting for good deals. What I would say is at the earlier stages, it may be a little tougher, especially if you don't have product or revenue. So like pre-seed or more like early stage may get a little tougher for a little while. But at the end of the day, people need to deploy.
Yeah.
People need to deploy to get paid. These funds have been raised. They've been committed. They're gonna deploy. It's gonna happen. You just have to be smart about how you present yourself. And again, like another person's loss is your opportunity. You have to shift from being sort of like the game you play changes, right? So last year, the game you would have played is like, oh, it's like founders have all the power, you know, look at this great company, we're the Uber of X, whatever, we're the WeWork of X. That maybe happened pre-September. Now it's, you have to be aggressive, you have to be gritty, you have to be willing to negotiate on valuation, and you have to be very, very, very good about metrics, understanding your margin, managing your capital effectively. There's going to be a lot more scrutiny of your ability to grasp the operational aspects of being an executive, which I think a lot of people don't. A lot of people are like, I'm an entrepreneur, like we're going to go to this conference and talk about our product. And I'm like, that, no. Like it's going to be much more operationally focused. So people who are wartime leaders are going to be really effective in this environment. And I think Ben Horowitz had a great post from 2011 about that called Peacetime Generals versus Wartime Generals, where he was talking about being a CEO in a boom cycle versus being a CEO in a bust cycle. Two totally different things. Some people can be both. In a lot of cases, people can't.
Yeah.
So people who shine in times of crisis are going to have a great time.
Yeah. That's awesome. That's really good advice. I love it. I'm actually putting together a talk about product management and fundraising at the same time. So I'm going to take some tidbits about what you just said and put it in there.
Yeah, I'll share what I send tomorrow with you. Unfortunately, I have to have my compliance team review everything because we're regulated.
Yeah.
But once they give me the sign off, I'll share it with everyone. I was going to just post it and then also share with everyone the update I recommend you send to investors every month. Okay. It's like a really short, very simple template. But like if you send that every month to people and you communicate with consistency and clarity, that goes a long, long way in creating confidence.
That's great. That's great. Yeah, we have quite a few entrepreneurs listening to this show, so that'd be awesome.
And my DMs are open. So like, hit me up. Free information on the internet.
Nice. And how do they hit you up on the DMs again?
Yeah, at @melt_dem. Come find me, come talk to me. I'm always around. I may not be the most responsive. Like sometimes people message me and then 5 minutes later, they're like, you're a bitch. You didn't message me back. Don't be that person.
And then you're like, drink water.
I should send them that.
Yeah.
Drink water.
Awesome.
I usually just send a little thumbs up.
Thanks.
Cool, bro. Cool.
It's the new road range. It is pretty funny when anybody does do that. Is there anything
it. I get the hustle. I've been there.
Yeah. I don't get this, like the sabotaging yourself part though, but totally.
Hunger manifests in different ways in different people. Like I have a lot of empathy for people who are really hungry. I have been there.
Yeah. Fair. Anything you want to leave people with? Some parting words, question that people should be thinking about in these times?
Don't like okay. If you're going to sit around and take these next like 6 to 8 weeks and eat shitty food and watch TV and like do all the dumb shit everyone else is doing, you're going to look back and you're not going to take anything away from this. Read a book. Read a book. You can go to projectgutenberg.org. Free books, free 99. Kindle unlimited subscription on Amazon, first 3 months, free 99. Like there's a lot of great free stuff out there. Like use this time to learn, use this time to build. Call your mom, call your friends, tell people you love them. Don't sit. I see a lot of people just sitting around. They're like, I'm going to binge watch every show. And I'm like, cool. Like I'm going to watch an episode of Mr. Robot tonight. I hope. Cause I'm trying to catch up because I never watched the last season. But like, don't sit around and do that with your time.
Yeah. I mean, only if you're going to watch shows about the end of the world and it's out as preparation of like how you're going to operate during the zombie apocalypse.
No, because
but
the world's not going to end. Dude, we talked about this. The world's not going to end. And when the world doesn't end, the only question is, did you do your job?
Yeah, it's true. It's true.
Build something. Like,
I was being sarcastic.
Do your taxes. Do something. But I think a lot of people like they like this time, they're not really sure what to do. Like, find something you're excited about and just do something, anything.
Totally.
But don't sit around, and like focus on your relationships, focus on building your skills, focus on building up yourself, and like give yourself the resources and skills you need. Build a solid foundation that you can build on. I've been using the habit tracking app Streaks, which has been helping me build some new habits, like taking my vitamins, getting up and walking around, drinking water, going to the bathroom more than once a day because it's like gross when your pee is brown. That's not good. Yeah, so like use this time to grow and learn. I think we forget sometimes with how busy we are, how important that is. But I think this is just such an amazing time to focus on that.
Yeah, I want to stress what you said about like the kind of like the learning new skills thing is because a lot of times people might think it's like, oh, well, I don't have an idea to work on. It's like, that's okay. Like learn how to use Wix or learn how to like send social tweets or learn how to do email or whatever, you know, whatever it is. Right. Yeah. So that way, when you do have the idea that you want to do, you already know how to use the tool. Right.
Yeah. So. And I think a big one is like build mental discipline. Like mental discipline, mental toughness are underrated. Like give yourself the tools you need to manage your emotional state. I'm by no means an expert, but it goes a long way towards making you more resilient and just helping you deal with unexpected events. And there are going to be more and more unexpected events in this world. Right. That we can be sure of. The world may not end, but it's sure going to be weird.
There's going to be a lot of fun happening. Well, Meltem, thank you so much for being on the show. I really appreciate it. This has been an awesome conversation. I'm excited to keep up with you, and hopefully we can do this again in the future.
Yeah. Thanks for hitting me up. You hit me up on DM. I responded in like an hour. Here we are like 6 hours later.
Yeah. I didn't have to use any cuss words. Yeah, that was awesome. Cool. Well,
awesome.
Well, thank you so much.